Alright, welcome to STARZ Investment Decisions and Directions. Sunway Construction Group Berhad and IOI Properties Group Berhad stand as a prominent pillars within Malaysian construction industry. So today, we are meticulously explore the rich histories and background of these esteemed companies, delving into both their monetary and non-monetary information. Furthermore, we will leverage this comprehensive analysis to inform our investment decisions, aligning with our group strategy perspective.
Today, I would like to introduce one of Malaysia's most distinguished construction company, Sunway Construction Group Berhad, as well as building construction, civil engineering, and mechanical, electrical, and plumbing system. They offer a wide range of design and construction service. As we look back on Sunway journey of more than 4 decades, we cannot help but be reminded of pivotal role that Sunway has played in national building and social development. It is a testament to Sunway global ambitions that its footprint has spread for the border of Malaysia with growing operations in Asia and United Kingdoms. Under the able leadership of Group Founder and Chairman Tan Sri Dr. Jaraficha AO, Sunway has aggressive region to the challenge of achieving the 17 United Nations Sustainable Development Goals. Under his visionary leadership, Sunway has become a pioneer in driving sustainable change to create a better world for future generations. Sunway vision is to be a major force in the field of construction engineering, not only locally but across the regions. With an unwavering dedication to continuous innovations, Sunway is not only to delivering value but also to redefine the very nature of the practice of agriculture. The core of Sunway mission is pursuit of sustainable development and the creation of value for all stakeholders. Sunway also recognizes the importance of building lasting alliances based on mutual respect and shared goals. It is through this meaningful relationship that Sunway is committed to achieving the higher standard of quality, environment sustainability, and occupational health and safety. Now, look at financial statement. Let's start with an overview of statement of profit or loss for the financial year end 31 December 2023. As we can see that its revenue is about 2,671,225 ringgit. After deducting the cost of goods sold, result in a gross profit of 434,182 ringgit. By aggregating all operating income and subtracting expenses, the Sunway Construction Group Berhad ultimately achieved 154,342 ringgit profit for the fiscal year. For the Sunway Construction Group Berhad statement of financial positions as 31 December 2023, based on these statements, we can estimate that the company's non-current asset is 843,612 and its current asset at about 2,239,187. When these assets are added together, the total assets of Sunway Construction Group Berhad is 3,082,799. Moving on the equity and liability part of this statement, it shows that Sunway Construction Group Berhad also holds 891,957 ringgit of equity and 2,190,842 of liability. Therefore, the total of equity and liability is 3,082,799. A financial statement balance reflects the fundamentally accounting principle.
IOI Property Group Berhad, also known as IOIPG, or simply, the group is a major player in property development. With over 4 decades of experience, it's a key developer in Malaysia. Based in Malaysia, the company portfolio includes property development, property investment, as well as hospitality and leisure. Its core activity involves the development of residential, commercial, and industrial property alongside investment in shopping mall, commercial, and office space. We will delve into its business profit in a moment, but first, let's start with a look back at its history. This was the timeline for IOI Property Group Berhad. Originally, IOI Property Group Berhad wasn't named as it is now. It started as Dam Sun Huat Development Sendia Berhad, founded by Lee Shing Cheng in 1975, marking its beginning in property development. This early period set a stage for the company's later achievement. With its first housing project in Kajang, Malaysia, Lam Soon Huat Development started shaping Malaysia property landscape. Under Lee Shing Ching leadership, Lam Soon Huat Development Stendian Berhad experienced steady growth and expand its presence in Malaysia real estate market. Throughout the 1980s, the company focused on growth through acquisition, strategically expand its portfolio. This concern effort enabled Lam Soon Huat Development to broaden its reach and established a robust presence across various segments of the industry. In the meantime, the company achieved a significant milestone by listing on the Kuala Lumpur Stock Exchange. This moment not only boosts its visibility but also highlights its credibility and appeal to investors seeking opportunity in the growing real estate market. However, in 1994, Lam Soon Huat Development Berhad was renamed as IOI Property Group Berhad to better reflect its new identity as a major subsidiary of the IOI Group. The name IOI potentially signified success, reflecting a company ambition. This rebranding marked a significant turning point, setting IOI Property Berhad on a path of growth and diversification, strengthening its position in Malaysia property market. While firmly established in Malaysia, IOI Property's ambition extends beyond its border. By the early 2000s, it started expanding its international market like Singapore and China. This step marked a significant milestone, allowed the company to explore new opportunities and establish itself in global real estate market beyond Malaysia. After a year of steady growth and expansion, IOI Property Group Berhad achieved a significant milestone on 15 January 2014. It became listed on the main market of Bursa Malaysia, confirming its status as a top player in Malaysia property market. This listing not only provides access to new capital for future projects but also serves as a testament to the company's strong financial performance and investor confidence. Now, let's talk about the company business portfolio. The company has three main business segments: property development, property investment, and hospitality and leisure. Firstly, property development forms the core of IOI business, focusing on residential, commercial, and industrial projects. One notable example is IOI City Tower in Putrajaya. This integrated development showcases in company expertise in creating vibrant mixed-use environment that combine retail, commercial, and leisure components. Secondly, property investment for IOI Property Group Berhad involves acquiring and managing various property assets as part of its diversified portfolio. This strategy involves acquiring property like shopping malls, offices, residences, and industrial parks to generate rental income and long-term capital growth. A key example is IOI City Mall in Putrajaya, Malaysia, renowned as one of the nation's largest and most accessible shopping centers. Besides that, hospitality and leisure are also part of the business portfolio of IOI Property Group Berhad. It offers a lifestyle experience by operating hotels, resorts, and even golf courses. One such example is Palm Garden Golf Club, located in Putrajaya, Malaysia, making it easily accessible to golfers in this area. This well-maintained course is renowned for being enjoyable for players of all skill levels. Now, let's look at its financial statement. Let's start with an overview of the statement of profit or loss for the financial year end 30 June 2023. As we can see, its revenue is about 2.6 billion after subtracting the cost of goods sold, resulting in a gross profit of nearly 1.1 billion. By aggregating all operating income and subtracting expenses, the company ultimately achieved an approximate 1.4 billion profit for the fiscal year. Now let's examine its statement of financial position as at 30 June 2023. According to this statement, we can know that this company holds nearly 32 billion in non-current assets and approximate 11 billion in current assets. Combining these, IOI Property Group Berhad total asset amount to nearly 43 billion. Moving on to the equity and liabilities part in this statement. It shows that this company holds approximately 22 billion of equity and approximately 20 billion for total liabilities. In summary, the total of equity and liabilities are same with the total asset, amounting to almost 43 billion. This reflects the fundamental accounting principle of balance in the financial statement.
So now I'm going to talk about the liquidity ratio analysis. To measure a company's short-term financial health, we use current ratio to compare its current asset to its current liability. After our measurement, we found that Sunway's construction has a higher current ratio of 1.32 compared to IOIPG, which is 0.66. This means Sunway has 1 ringgit and 32 cents in current asset for every 1 ringgit in current liability. In the other words, Sunway's construction is in a relatively healthy position to meet its short-term obligation. But for IOIPG, it may struggle more to cover its short-term obligation. As a suggestion, IOIPG might consider strategy to reduce its debt burden by actively paying down debt to improve its liquidity position. So, by using the similar equation to evaluate a company's abilities to cover immediate liabilities using its most liquidity asset without relying on inventory, we should use quick ratio. After deducting the inventory, Sunway's construction has a quick ratio of 1.29, which means Sunway's construction has a good ability to cover short-term obligations without relying on selling inventory. But IOIPG has a not optimistic quick ratio of 0.51. They should focus on optimizing its working capital management to ensure efficiency use of its current assets and liabilities. Now we go through the part efficiency ratio. The first inventory turnover ratio, which gauges how effectively a company manages its inventory by comparing the cost of goods sold to the average inventory value. For example, Sunway's construction has a very high inventory turnover ratio of 44.81, suggests that is effectively management in its inventory. But IOIPG has only a low inventory turnover ratio of 0.55, indicating a slower inventory turnover. To improve it, IOIPG could maintain its efficiency inventory management practiced by continuously monitoring inventory levels. The next ratio we go through is the accounting receivable turnover ratio, which reveals the average times it takes for a company to collect payments from its customers. By comparison, Sunway's corporation has a higher accounting receivable turnover ratio of 190.06 compared to IOIPG, which is 50.77. This means Sunway's construction has to take 191 days to collect all the payments complete properly, but IOIPG only needs 51 days. Obviously, IOIPG shows more efficient credit management and timely conversion of receivable into cash. Okay, the first ratio in leverage ratio is debt ratio, which we normally use to measure a proportion of assets founded by debt with comparing a company's total debt to its total assets. Sunway's construction has a debt ratio of 71.01%. This indicates that 71.01% of its assets are financed by debt. And IOIPG has a lower debt ratio of 47.35%. This implies a relatively low level of financial risk and potentially greater financial flexibility for IOIPG. As a suggestion to Sunway, they can focus on managing its debt level to reduce financial risk. Next, to measure a company's ability to cover its interest expenses with its operating earning, we use the times interest earning ratio. Sunway's construction has a time interest earning ratio of 4.94 times, indicates that the company's operating income is sufficient to cover its interest expenses approximately 4.94 times over. But IOIPG is better. It has a significantly higher time interest earning ratio of 558.24 times. This indicates a very strong ability to cover its interest expenses, reflecting a low financial risk associated with debt servicing and a high level of financial stability.
The gross profit margin is a crucial profitability indicator, varying the portions of revenue retained after deducting the cost of goods sold. Sunway Construction shows a gross profit margins of 16.25%, suggesting a moderate profitability in productions and pricing efficiency. In contrast, IOI Property Group's Berhad boasts a higher margin of 42.24%, reflecting a potentially superior cost control or product mix. Suggestions for Sunway Construction include enhanced cost management, while IOI Property should maintain efficiency and explore value propositions. The net profit margin, another key profitability measure, indicates a percentage of revenue translating into net profit after all the expenses. So Sunway Construction Group Berhad 5.46 margin suggests a moderate profitability, while IOI Properties Group Berhad 54% indicates enhanced profitability due to lower expenses or higher revenue. Sunway Construction Berhad should focus on improving operational efficiency and sustaining profit maximization like IOI Properties did. However, in ROA, assesses profit generation relative to total asset, Sunway Construction Group Berhad ROA of 4.73% outperforms IOI Properties Group Berhad 3.28%, suggesting a better asset utilization efficiency for Sunway. The recommendations for IOI Properties include enhancing asset efficiency and exploring avenues for profitability. Right, in the ROE, return on equity, evaluates a returns of shareholder equity investment. Sunway Construction Group Berhad ROE of 16.35 surpassed IOI Properties Group Berhad 6.24%, indicating a superior profitability and value creations for shareholders. IOI Properties should optimize its capital structure and operation efficiency to evaluate profitability and enhance shareholder value. So based on our analysis, Sunway Construction Group Berhad stand out as a preferred investment option due to its superior performance in key profitability metrics such as the return on asset ROE and return of equity ROE. Sunway Construction demonstrates efficient asset utilization, reflected in its higher ROA of 4.73% compared to IOI Properties Group 3.28%. Additionally, Sunway Construction boasts a higher ROE of 16.35% versus IOI Property Group 6.24%, indicating a better profitability and value certain for shareholders. Moreover, Sunway Construction exhibits a favorable liquidity ratios, ensuring its ability to meet short-term obligations. Despite IOI Property Group had higher profit margin, Sunway Construction's stronger performance in ROA and ROE positions it as the more attractive investment opportunity for our group.
So now I'm going to talk about the market trend for Sunway Construction Group. Over the past 5 years, Sunway Construction Group's performance in the market has been up and down. In the overall pictures, you'll notice a slight dip that isn't noticeable. However, there's a good news. In the last years alone, their share price shot up by a whopping 75 and 86%. This surge suggests that investors are feeling really confident about the company's future. Thus, Sunway's construction returns on capital employed (ROCE) is at 16%, which is higher than the industry average of 7.7%. This means they are using their money smartly to make profit. But there are some challenges too. Despite making more money and investing more capital, Sunway's construction's returns on capital employed has actually gone down recently. It seems like the building side of their companies is doing better than the precast industry. They're also working hard to improve efficiency by cutting staff and managing credit better. So next part, we'll go through the industry regulations. Next, we'll talk about the strict rules that are set by different regulation bodies, and followed by Sunway's Construction Group Berhad. When starting out in business, Sunway's Construction must register with the Construction Industry Development Board (CIDB). This government agency oversees constructions in Malaysia, setting standards for workers and companies. The next body is the Securities Commissions of Malaysia (CSM). This is Malaysia's authorities on securities and future. Sunway's Construction has to follow their rules, like disclosing financial info, since they are licensed on Bursa Malaysia. When we talk about Bursa Malaysia Securities Berhad, Sunway's Construction is listed on this stock exchange, and they have to stick to Bursa Malaysia rules on governance, disclosure, and financial reporting. By the way, Sunway's Construction is also a member of Master Builders Association of Malaysia (MBAM). This non-profit group represents Malaysian construction firms, promoting good practice. Not only that, They help business to keep up their qualities and reputation. Last and interest is Sunway's construction use materials from their own Sunway's building materials group, BNG, for projects.
Alright, now let's look at Sunway Construction Group Berhad Industry Insights. Sunway Construction Group Berhad had been a key player in Malaysian construction and infrastructure sector for over 40 years. Sunway Constructions offer a range of services, including constructions, real estate, investments, education, and healthcare. First, we go on construction services. Sunway Construction undertakes diverse projects like residential, commercial, industrial, and infrastructure development. Second, we go real estate investments. Sunway invests in properties such as commercial buildings, malls, and hotels. Third, education ventures. Through Sunway Education Group, Sunway operates academic institutions like universities and college in Kuala Lumpur. Fourth, we go to healthcare. It provides comprehensive healthcare services with patient-centered care, advanced technology, and collaboration with healthcare professionals. Let's go to its SWOT. On strength, Sunway has a solid reputation and track record. Sunway Construction has a strong order book and a history of successfully completing projects in the Malaysian construction industry. This reputation affects new customers and ensures repeat business. Second, on strength is extensive project experience. Sunway Construction has expertise in diverse construction areas like high-rise buildings, infrastructure, and civil engineering. Their versatility enables them to compete for various projects, reducing business risk. Next, we go on to Sunway's weaknesses. First is limited geographic pressure. Sunway Construction's operations are primarily concentrated in Malaysia, limiting its growth potential compared to competitors with global reach. Second, on weakness is skilled labor shortages. Changes in Singapore's rule on overseas workers have slowed the increase in workforce availability. This scarcity impacts Sunway's construction ability to efficiently manage projects' timeline and costs. Third, on SWOT is opportunity. The first on opportunity are changing customer preferences. Sunway Construction can capitalize on these trends by monitoring industry developments. Second on opportunity is collaboration with other companies. Sunway Constructions can partner with local and public and private sectors construction firms to enhance profitability and business opportunity. Fourth on SWOT is threats. First is fluctuation in material costs. Unexpected increase in construction material costs can impact projects, budgets, financial performance, and investor confidence. Second on threats is intense competition. The construction industry is highly competitive, both locally and internationally, which may lead to pricing pressures and margin challenges for Sunway Constructions. In summary, Sunway Construction Group Berhad benefits from a strong reputation and extensive project experience, but faces challenges like limited geographic reach and skilled labor shortages.
Now, I want to talk about the non-mandatory information for IOIPG Group Berhad. First, I want to talk about the market trend. Market trend at IOIPG Group Berhad are impacted by the comments on social media, certification survey, and customer attitudes. While the critical comments might point out areas for development, positive comments can enhance the brand reputation and attract customers. The company assessed the architectural design, building quality, and facility of the real estate project, taking the sustainability and architectural excellence into account. It also assessed with a concentration on sustainability and ethical behavior, its environment, social, and government ESG standard. The conflict of the IOI property is elaborated by means of market share, pricing, and innovation. Technology integration by the firm its goal can raise the operational efficiency and customer happiness. Business success results from the innovation and commitment that a durable corporate culture promotes. Next is the industry regulation. We see the group sustainability statement. IOI Property Group Berhad is a committed of sustainability and building trust with shareholders. The Sustainability Report 2023 details the company's environment, social and governance ESG standard process in property development, investment, and hospitality. The report complete with the regulation standard like Bursa Malaysia main market listing requirement, GRI Standard 2021, TCFD Framework UN SDGs, and SASB Guideline, and follows the Real Estate Quality Standard ISO 9001 and 2015 as well. Its building projects are granted to fulfill the industry standard of quality and independability by its certification with the Quality Assessment System in Construction, QIA SSIC. IOI showed that it is determined to provide excellence advance.
Now, let's look at IOI Property Group Berhad Industry Insights. IOI Property Group Berhad, or IOIPG, is a prominent player in the real estate industry, focusing on property development, property investment, and hospitality and leisure sectors. The company has a diverse portfolio of assets across Malaysia, Singapore, Xiamen, China, bolstering its global presence. First is property development. IOIPG specializes in creating sustainable townships and commercial properties. In key region, property investments comes next. IOIPG owns and manages significant retail and office spaces, including prominent malls like IOI City Mall in Putrajaya. Third, hospitality and leisure. IOIPG owns luxury hotels and premier golf courses, emphasizing its commitment to delivering exceptional hospitality and leisure experiences. Fourth, financial stability. IOIPG's financial report for the year ended June 2022-2023 highlights strong revenue generation, strategic investments, and a healthy asset portfolio, establishing it as a stable player in the real estate sector. Let's hop on to its SWOT analysis. First comes strength. First on strength is varied portfolio. IOI Property Group Berhad diverse operation in property development, investment, and hospitality provide multiple income streams, reducing vulnerabilities to market fluctuations. Second, international expansion. Successfully operating in multiple countries demonstrates adaptability and a strategic global perspective, enhancing growth opportunities. Third, impressive financial performance. Robust revenue and profitability showcase excellent operation, efficiency, and financial stability, boosting investors' confidence. Fourth, sustainable initiative. Embracing sustainable practices aligns with market trends and regulatory requirements, enhancing brand reputation and attracting environmentally conscious stakeholders. Second on SWOT is weakness. Limited geographic coverage was the first. Relying heavily on specific regions exposes IOI Property Group Berhad to economic challenges or regulatory changes in those areas. Second, market dependence and instability. Fluctuations in property demand and pricing due to market conditions and economic factors may lead to volatility in stock performances, affecting investors' confidence. Third on SWOT is opportunity. First is infrastructure development. Participating in government infrastructure projects can expand property development prospects and revenue streams. Second, market expansion. Exploring new markets or region offers opportunity for further growth and market penetration. Fourth and last on SWOT is threats. Regulatory risks are the first. Changing in property development policies, zoning regulations, or environmental laws can impact project feasibility, profitability, ambiguity in regulations may lead to delays and increased project expenses.
So as a conclusion, Sunway Group Berhad emerged a favorable investment option compared to IOI Properties Group Berhad due to several key factors. Sunway Construction exhibits a positive market trend with a notable increase in share price, reflecting investor more confidence and growth potential. Its return on capital employed (ROC) stands 16%, well above the industry average, indicating efficient capital utilization and profitability despite recent fluctuation. The company adheres to industry regulations set by the regulatory bodies, ensuring transparency and accountability. With a diversified business portfolio, spanning construction services, real estate investment, education, and healthcare, Sunway Construction maintains a resilience against market fluctuations and present opportunity for sustainability growth. Strengths such as a solid reputation and extensive project experience outweigh weakness, while opportunity for collaborations and adaptation to changing customer preference abound. Overall, Sunway Construction Group Berhad demonstrates a strong fundamentals and strategy visions, making it the preferred investment choice for our group. Thank you.